Welcome to Chart TV, everybody. This is Doug McKay, the anti-Wall Street guy at antiwallstreetguy.com. Happy Easter, everybody in the office, Easter Sunday. I just wanted to do a very simple video today. We can either use the S&P 500 or the SPY. What we're going to do is we're going to pull up a chart of the SPY instead. And we're going to start out here with a daily chart of the SPY where the candles are days. And the biggest decision, at least in terms of probabilities via pattern recognition on these charts, where we felt that the market would go higher, was this day right here. And this particular candle that day, the market sold off on heavy volume. You can see the volume down here. But then the market pretty much closed at the high for the day. And that was a very positive sign that this little dip during the day was bought. I'm sure there were some stops hit, and then the market recovered. And then once we got back above the high of this candle here, that was a signal to jump back into the market, which we did, and I'm sure most everyone else did. And that was the reason for this big move here. So on Thursday, the market was closed on Friday, Good Friday. We closed at 117.80 on the SPY. So where do we go from here? Well, let's take a look at this now. Let's open it up a little bit on a weekly basis. And we've been saying for the longest time, at least the last 6, 7, 8 months, that we felt that a top in the S&P 500 was somewhere between 11 and 1200, maybe 12 and a quarter. So for our purposes, looking at the SPY, we feel that a top is somewhere between 110 and 120, maybe 125. Now, having said that, we're dealing in probabilities. We always use stops. So we want to trade what we see. That if the market continues to go up, we'll just trail our stop up underneath it, which basically means it can go anywhere. But when we take a look at it on a weekly and then certainly on a monthly basis and open it up even more, we want to deal in probabilities, right? That's what this game is. It's a game of probabilities and not certainties. That's why we don't buy and hold. Buy and hold implies certainty that the market's always going to go up. But when we look at this, we can see on the SPY 125 is certainly an area of major resistance on the SPY, going back, essentially to 2007, 2006. There's also a case to be made that we're very close to resistance, if not right at it right now, at 120 on the SPY. We're at 1780 on a close on Thursday, which would basically be 1178 on the S&P cash. Let's take a look at the S&P cash. Again, we close at 1178 when we open this up. Go from a daily chart to a weekly chart. Again, over to the left here, we can see resistance at 1200. Okay, so what does this mean? Well, this means that the trend is long. If I was someone in 100% cash, certainly the trend could continue to move farther, but I would be cautious here, and we could be looking at a trend change soon in the S&P 500. But for now, we'll ride her till she bucks us, knowing that based on today's video that we'll have some selling based on probabilities at 1200 if we get there. Thank you again for visiting Chart TV. This is Doug McKay with antiwallstreetguy.com. Enjoy the rest of your weekend. Thanks.